Good morning, everyone. Well, I did the update this morning at about, I don't know, 6:15 or so. And we had this robust rally in the Globex session from the high volume node yesterday, right here. Okay, so this happened at about 11 last night. Then we had the straight up in Globex, not straight up, but pretty much. Then I took my son to his training this morning, and then I come back and I see that the market is cratering. Is this a crazy market or what? And I don't know what the attribution for this is, but sort of nutty. This is an important area down in here, guys, that we're approaching now in the stock index futures. Morning, everyone that may have been in since the last time I said good morning. Anybody out there? Hey, Morg. I know Ron was here. Andrev was here. I'm getting ready. I'm going to send out a report tonight on a topic that I think is really pertinent, and I'll discuss it with you guys since you're in. You get bonus coverage here. If you look at my screen, you see the charts of notes, the U.S. 10-year note and the U.S. 30-year bond. And what you see here, really, I'm going to take the bond. What you see here is pretty much classic auction market development in progress. When you're trading auction market principles, you always default to what the market is doing. What are the buyers and the sellers doing? Because that's all that matters. And then you rely on the patterns that an auction market development process will form on the chart. It's sort of the visual artifact of the auction process. That's what we're trading. And so you have these balance areas that form, and you trade the extremes of the balance areas. The balance areas create levels that shouldn't be violated under a given scenario. And you never want to be on the wrong side of a high volume node for long. That's rule number one. You never want to be on the wrong side of a high volume node for long. It's that simple. Now, being a trader, and I've been trading for 35 years, and believe me when I tell you, I would be shocked if of the thousands of people that I have come in contact with and that I send information to, I would be shocked if cumulatively they have explored more avenues of trading than I have. And it's not that I'm special. It's just that I've been trading longer than most people because I'm old and I've been trading for 35 years. So trust me when I tell you that all of this stuff that I dismiss as nonsense is also stuff that I tried to use and that I just found that didn't work and I discarded it. I'm stubborn, but I'm not stubborn to a terminal effect. Okay. And I found that as a trader, I had to let things go that weren't working or I was going to destroy myself. And I tried to destroy myself a couple of times. I have busted out more than once as a trader. So many, many years ago, fortunately, I discarded everything that I'd ever tried to use before and focused solely on trading auction market concepts. Now, back to the point at hand. I got a little bit off on a tangent there, which I am wont to do, but I think it is relevant background to the story. And really, I empathize with you. I'm not talking down at you. I don't mean to sound I know sometimes I sound condescending or dogmatic, and I really don't mean to do that. I have incredible respect for traders and the efforts traders make. And I'm just trying to share things that I know to be true and that I've experienced, so a lot of people don't have to go through what I went through to figure out what's going on. So back to the point at hand, and the real point I want to make. If you look at bonds have just been dead vertical, really, since last November. I mean, you've had pockets of horizontal development, and then you have conviction. Then you'll have retracements, and you'll have pockets of horizontal development. And then this latest move in particular, let's just focus on this latest move. We came down and tested this area. And you can go back at my reports and listen to what I was saying at the point in time. At this point in time, this was an area that had to hold. And then we traded up back into this area, and we formed this sort of funky balance area, right? You didn't have super well-defined, tested upper and lower extremes, but you had a common price. You had a common volume node, which was right in here. And then within that, you formed a smaller structure in here. And herein lies the beauty of this concept and its robustness, because you can identify these smaller degree areas that give you the risk of the smaller degree with the potential return of the larger degree. Once again, I get off on a tangent, but that's okay. So my point is, if you go on the internet right now and you start looking around back anywhere in July, actually before July, probably all the way back in May, you're going to see all these sentiment indicators and all these people that are purveyors of sentiment information talking about the extraordinary overweighted number of bulls to bears in the bond market. And you have had a number of people suggesting trades, really smart people suggesting trades to short bonds, to short notes, because the sentiment in notes and bonds is unprecedented for any market. And it may be, and that's fine and good. But your reality check, and that's another huge benefit of what we're doing here, guys. The reality check that auction market principles provide can be the most reassuring thing in the world for what matters, and that is your trading. So let's say that you just thought that bonds and notes were just going to absolutely get destroyed. Well, to do that, they had to take this level out. They had to take this level out. So if you wanted to short bonds, you could short them on a break of these levels against the most recent high. Now, if you were bearish on bonds, and you said, "Well, I'm not buying bonds," and I have done this in the past. You guys will hear me say occasionally, "Okay," and I'll give an example here. Palladium a few months ago was at all-time highs, up on a spike, and I said, "Okay, I'm not interested in the long side of palladium. I'm only interested in shorts." And I also said, and it's true, I'm not going to get hurt, because if I'm going to short palladium, I'm going to go down and find auction market structure in the smaller degree time frames where I can control my risk. But if you just slapped on a short trade thinking, well, it can't get worse than this, well, you probably destroyed your account. And I'll bet you some people have destroyed their account trying to sell notes and bonds when it's clear from an auction market perspective, demand is higher. Bonds and notes have not found an area of value presently. Now, this was an area of consensus value, and we've broken higher. So if you were one of these traders and you wanted to short bonds, the world's greatest reality check is auction market principles. Now, let's take another hypothetical. Okay, let's say that bonds just absolutely go straight down from here. Well, I'm going to miss that trade. But what I'm not going to miss, if bonds do have some sort of extraordinarily down move, they will eventually, guess what? They will eventually form a balance area. And then I have something that I can short against that's objective. And I don't have to depend on my guess or some indicator from a third party that says these are quote unquote overbought. Sentiment is another form of an overbought, oversold indicator. I'm not suggesting that if you use sentiment not to use it if you find it helpful, but I also encourage you to put it to the test, put it to the auction market test. If sentiment is so lopsided to the upside or the downside, it has to take out auction market structure to confirm what it's telling you. And if it doesn't, the market is the truth. We're trading the market. We're trading the actual activity between buyers and sellers. So keep that in mind when you're listening to Bloomberg or CNBC, or you're reading all these blogs and these macro blogs. I mean, it's fascinating. It's really fascinating. I mean, if you can find something that is more consistent and more accurate than what we're trading, I want to know about it. You'll be doing me a huge favor to let me know. And that's a challenge that I have been issuing for the 16 years I've been a quote unquote trading educator in addition to being a trader. But it's fascinating to me right now to watch this incredible move in notes and bonds, and not everybody, but a substantial number of people fighting it and saying this can't happen. Sentiment is lopsided. Well, it's happening, and this is the poster child for using auction market concepts to filter the other stuff that you may believe in or may be using, commitment of traders, sentiment, whatever it is. But if you just focus on this alone, on auction market concepts, conviction, the migration of value, you really don't need anything else.